While investors might view small caps as a safe haven from President Trump's new round of tariffs, our next guest says the numbers might suggest otherwise. Joining us now, Ryan Grabinski, Strategas Securities Managing Director of Investment Strategy. I guess, Ryan, that maybe the action in the Russell 2000 probably says otherwise as well today, since we saw it tumble on some of the latest tariff headlines. I mean, people are looking for places to, I don't know, hide maybe is a word from what's going on right now. Is anywhere in small caps a way to do that?
So it's great to be here, first off, but I will say, I think that's a pretty consensus idea that the fact that small cap companies have a greater share of their revenue from domestic sources, that they're likely going to outperform. That's not what we saw back in 2018. They were relative to the S&P 500. They were underperformers then. It's hard for me to kind of get on board with them now. When I look at the earnings picture, though, I think this is what's getting everyone's attention, is that when you look at the earnings picture, the second half of the year is actually expected to exceed that of larger companies. So I think there's this relative trade that's getting everyone excited about them. But I'm not sure that they have this, they're not going to have the same boost that they saw in 2017 to 2021, where we got this corporate tax cut. So it's not exactly, a great place to hide. I think another, what's probably more interesting is if you think about potential industries that could actually benefit from the tariffs, right? So one of the things that I'm thinking about here is the fact that if you think about, okay, there's going to be 25% tariffs on autos potentially. That ultimately, what does that ultimately mean? How does that resonate into an industry like insurance, for example? If auto prices are going up, insurance premiums are going to go up. Perhaps that's one industry that has pricing power. The other industries, maybe that is kind of getting away from small caps, but a similar idea on the domestic revenue focus is actually the utility sector, right? The utility sector in the fourth quarter was really driven by the AI, the additional need for power generation and AI. But perhaps now it's simply the fact that consumers are going to pay their utility bills. Everybody has to pay it, and they're getting rate increases, right? I know in my home state of Connecticut, we're seeing 7.8 to 10% rate increases. When I travel throughout the country, that's pretty common from what I hear from our clients as well. New York's going to see a 10% increase. I was just in Boston last week. They're talking 10, 11% as well. So it's certainly, utilities might be a place to hide. And when you go back to inflation, that's a really small component of CPI overall. So, thinking about areas that could potentially benefit from the tariffs is a different approach. Everyone wants to talk about all the negatives that we're hearing about in the news every day, including, not too long ago today.
Ryan, kind of a bigger question for you, a broader question. I know you say when the market is moving against you, and there's a lot of red on the screen today, you say, Ryan, it can be kind of tough for investors to keep their perspective. So help us with that perspective, Ryan. Just big picture, where do you think we're headed?
Yeah, I mean, we have to keep things in context, right? So it was February 19th where the S&P was at an all-time high. So if we were having this conversation 2 weeks ago, nobody would be concerned about tariffs. They'd say, oh, there's nothing going on. I mean, the market's down. On an average year, the market declines by about 14 or 15%. The average drawdown. We haven't seen one of those in the past several years. So it's really a lot of investors are really quick to jump to this idea that we're going to a recession. But we're seeing a momentum unwind. We're seeing a growth slowdown. That's certainly showing up in the Atlanta GDP now numbers. But the question is that already priced in? And are we going forward? Is that going to change? Keep in mind, there's a lot of focus on Trump and tariffs. He also has the power to reverse all of this, right? We know that he's a market watcher, and any day he could ultimately say, okay, we've achieved what we wanted to achieve by announcing tariffs on Mexico. We're gonna hold back for now, and I think that would really reverse the sentiment that we're seeing in the negative sentiment that we're seeing in the markets. That would probably get investors on the sideline, off the sidelines, and say, okay, we can kind of rotate back into those more cyclical sectors and remove that defensive tilt that we have.
Sure, he could. But man, who needs the stress, Ryan? Like day in and day out. Oh, it's a negotiating tactic. No, they're going into effect. Oh, maybe they won't go into effect. Maybe they'll be, as an investor, you got to make decisions. You got to push the button one way or the other. And it's hard to push the button when you don't know the answer to that question, right?
Certainly. I mean, you could say the same thing about, from a corporate financial planning perspective. They come up with their budgets well out, and if you don't know what the rules of the game are, what the rules are going to be, it's hard to make that capital investment or make that decision. So I certainly understand that, from an investor standpoint. But at the end of the day, we have to kind of play the cards that we're dealt. And if this is the market that we're in, to me it makes sense to kind of have, okay, you have a defensive tilt in a portion of your portfolio, and then you have you add opportunistically to the more cyclical areas that may have been driving themes that are likely to be secular themes over the next 3 or 5 years, and you invest opportunistically. Now that might be easier said than done if you're fully invested, and so it's difficult to navigate. But it's certainly the market that we're in, and until something changes, that's kind of the approach that I see you having to take.
Ryan, great to see you today. Thanks for joining us. Appreciate it.
Absolutely, great to be here.